Hello, 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 everyone. Today's Thursday, March the 27th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we begin by looking at the E-mini S&P 500. I have to tell you, yesterday, I did not expect us to come all the way down to this 57, 51-ish area and below. We did step. Here's a gap. This is the gap that we're watching, the gap between the low of the day on March 24th, which is 57.39, and the high of the prior day, which was a Friday, which was 57.23. So we've got about 20 points here into this space to fill this gap. My thought is the following. My thought is that we actually come back down into this area and then try another bounce. It could be that we bounce and move up again, but here's what I want to remind us about. Remember this area of heavy congestion in the past that goes all the way back to July 8th, that week, 2024, and really breaks away from it in November. From July to November, we sit in this very wide range. Okay, so what did we just do over the last several weeks? Here was inventory accumulation and 2 weeks of distribution. I thought we would get to 58.93 first rather than chopping around the range, but things appear a little bit weaker than we expect. Volume yesterday was, let's take a look at volume, just so I can show you. Volume was not that bad, right? Not that bad. And advancers to decliners were not savage, right? We had a few more decliners, but not a lot. Not really, not a lot. And so the thought might be that we're in a little bit of a sideways slosh. We're waiting for, what are we waiting for today? GDP, international trade goods, jobless claims. Jobless claims are going to be pretty important, really. But the good news is that we did not head lower on higher volume. Although that's an ugly break, no doubt about it. It's an ugly break. But what it tells me is that the movement is still in this range I'm discussing that will give us wider views. Now, let's go back. Yikes, all these lines. Remember what the lines tell us? Heavy congestion in broader terms, okay? Heavy congestion. So, what are we doing? Thin volume pockets, overnight, higher lows, but we cannot break up over 5769.75, right? 5769.75 is going to be the number to watch. We could sit in a very wide range, but here's the opening candlestick formation. We broke out. Here's the breakout initially. It tests and then closes at a higher low. So the theory says if we're above the VWAP, we take the trade on the break to the north. It puts us back inside of this box. And so we look to the left, meaning yesterday's motion. And so we look to the left for targets. And that's exactly what we had here. Went right into the target of another day's opening high or low. Maybe I should change those colors. I don't know. It feels like that might be a lot. But we can see. So far, we're above the high and trying to hold it. Now, here's the thing. If we can't hold it, we'll come right back in. Here's a liquidity area at 5743. Below it is another opening range area at 5740 and then 5731. What are we seeing? Now we're under the VWAP and our 5 has got a little bit of downside pressure attached to it. We are trading underneath it, telling us that dips are going to be the best buys if we're trading the slope of the VWAP, that spikes will be the better lows if we're trading the direction of the moving average. All right, so levels to watch today. The low of our Globex open hourly candlestick. That's 5,730. The high of the test that brought us back down, and so that number is 5769. If we breach 5769, 5788, and yesterday's closing VWAP, 5782, become the frames of reference. What do I think about the day? It's pretty stinking sideways the way it looks. They are trying to hold the region above this gap. It could be that they hold it and they retest it another time. I'm going to stick with my above my hourly candlestick high on the open. I'm going to look for dips to buy as long as my VWAP is sloping up. That's what I'm looking for. Let's go to the NQ. Let's go to the day. Well, let's go to the weekly first. Here's the week. Inside the box, we came to 20,000. What did we do? 20,536. That's about 100 points below that area. And then 20,066. I think we're probably battling somewhere around that right now. Yep. And we are at the 50 on the weekly. We have a downward 5. We have an upward VWAP, sideways pressure. But you can see how important it is for buyers to hold this region of 20,000. If it breaks, as it did in the 3 weeks past, we'll have to stair step down 19,300, the next space, and then potentially right inside of this range. Look at how long we stayed in this box from May 2024 all the way to November 2024, the end of November. Let's go to the hourly charts. Framework is going to be the same. Here's the range, opening formation. If I trade above the VWAP, break out of the range. If it puts me inside of prior day's congestion, I take the trade into the first area of resistance. That's going to be the counter trend long. I'm going to cover my trade there because it's counter trend to the move that we are seeing right now. So, what are we looking for? We're looking for the low at 20,000 to hold. If it doesn't, there's a potential for 200 more points to the south. Here is the base of the gap. I think I will clone this line and bring it down here into 19,978. Okay, so should we see buyers sitting right around here? Yes, we should. Could they fail? Absolutely, because the trend is down. This is what JD would call some sort of flag pattern, and it has broken, anticipating those lower regions. Yep. And that's what we will be seeing. So right now, what are the traders trying to do? They're trying to hold the low of this area. Is a long a good idea down here in the thin volume area? Well, not really. I don't like the long here. I would prefer it to break down, look below, fill the gap, and then fail to head lower, right? So instead of a look below and go, it would be a look below and fail. And that would be where I would position a long. That being said, if we had a look below and it failed, and I can't get back above the low of the prior day, which is 20,044, there's a problem. I think that there's a problem. And so we'll keep our eyes on that 20,044 as the region to watch if we try to stage a bounce. Okay? Upside pressure, we just walk from one level to the next. Just one level to the next. And we use trend as our friend. Here we are in the YM. Let's take a look at the week. So, doing the same thing, holding the 50 on the weekly inside of this wide range from 41,700, that gives us that buying zone. Potential upside 43,580, all the way to 45,000 really, but we don't really feel that's going to happen. There's negative drift in terms of momentum, double topping formation. Looks weak. for further upside at this juncture. So what do? We go carve out where formations are going to sit. Very crowded. Look at all the lines, right? We go from region to region. What did we do this morning or last night? Here's our opening range candle. You know, it's 200 points wide thereabouts. Well, not really. Maybe about 130 points wide. Pretty good, though. So what's the trade? We break out above it. The next candle opens. We take the trade out of the box. We look to the left for targets. We take the trade out of the box if the VWAP is sitting above us. Okay, that daily VWAP, it certainly is. We take the long. We walk it into the targets. First, 42,770, and then 42,875, at which point we're sitting at the volume point of control as well. It's a good area as any to take profit, right? Coming back into that opening range. If you said, well, I'm just going to wait until it breaks down, you see the topping tails right here. The test above the high of the opening range candle. And so that's still bullish. It literally is the same area you would have collected the first time. It gives you two chances to take a long. This, potentially a topping formation. We are trading under the 5, but still above the VWAP. That's price compression. That's going to be the area where you go, I don't want to trade this because it's a hot mess. You trade the bottom, you trade the top. What would I like to see? I'd love to see a fade that has a lot of buyers come in, right? I would like to see that. Let's see how much volume also. Lower volume, I like that. I did not take an eye to look. Yes, also lower volume. Excellent. Excellent. Taking a look at the daily chart in Bitcoin, we can see that it's in a very sideways patch. We know all about this patch, right? Low area, 80,000. High area, 108,000. That's a pretty big move. We've got some liquidity here at 89,684. And that looks like right at around 90,000. Now take a look at this. See this? All these higher lows. Just grinding up. Higher lows, higher highs, higher lows, higher highs. That's still in play. The flip side is that momentum has gotten very heavy, meaning it's way up here on its higher edges, but it's still telling us the dips are buys. So let's see what those dips look like on an hourly formation. Well, here comes one now. All right, where are we relative to price on the day? Listen, if you don't like the confusing lines all over the place, gives you kind of a crazy feeling, you can delete them. But these lines give us targets that are very, very nice. And if they converge with things like delta formations that you are watching and gamma flows that you are watching, it becomes very powerful. Okay, so here we are, inside of the opening range, right? Breakout. This is the candle that breaks out. You can take it in the midst of that candle at the break if you can manage the risk to the bottom of the box. Or actually, I would say the middle of the box where this candlestick is sitting around. You could certainly do that, right? Okay, so the breakout takes us into what? Prior areas of heavy congestion. So you might go, well, geez, they're right here. And then the next one is way up here. So I'm holding out for 87,900. If your price action starts to do this, it tells you, uh-oh, I don't think I've got that. Take some profit. Where's the best trade? Bottom of the box. I'd love to see this look below and fail one more time so that it gives us some stabilizing motion right at around this 86,700. If we fail to hold that area, we will not get above this region of mess inside of the Globex between 86,900 and 86,600, 700, something like that. So if we say, yep, I'm going to take the bounce, remember, you'll be under the VWAP, under all of these moving averages, and so it needs to behave reflexively and quickly, or you'll need to wait for the confirmation of price in some other way, right? Below 85,700, to 85,000. I don't see that here today, but you never know. And then above the breakout zone, we have, and that breakout zone is around 87,100. It goes to 87,300, 87,600, 87,800, and then 88,200. Let's look at oil. Oil saw a pretty solid reversal at 70. Let's take a look at the range. Bottom of the range, right? Higher lows, heavy congestion right around 70. Pretty important zone, right? 70, pretty important region. So they rejected it. Upward VWAP, flat 5, momentum way at the bottom. Pullbacks going to give us buy zones. Today we had the EIA report. Oops, let's go to the day. We can see it lifting. 50 above us, 50 simple moving average above us. Point of control above us. Moving averages and the VWAP upside. So old support, probably going to be resistance. Pullbacks are buy zones until we break over that 70 area and get to 72. The pullback zone on this chart looks like a 69. Yeah, 69. Right now we're at 69.54. Let's see what happens on the hourly. Again, very noisy. It tells you that these charts are not moving out and up or out and down. They are simply sitting in a gigantic range of motion. It's a gigantic range of motion. So what is the 1 hour telling us? Well, here's the opening candlestick formation. Well underneath it, right? We only get about halfway up. We get into this opening area range and we break. Here's the break. That's the trade short at the break of the line with the stop at heavy congestion. For me, you could also use the VWAP, right? Because I don't want a trade that is, 30 cents wide in oil. I mean, I could use it, but I don't want to. Yeah. So here's what we're seeing. It breaks down. It's the break out of the box. We are under the VWAP and under a 5. It tells us we've got flows that are going to hold our downside formation very nicely. Where do we go? Prior congestion, prior opening ranges. And so because I have the lines here, the first line, 69.45, I'm still under the 5. I'm still under the VWAP. I move my stop down. I stay in the trade. It takes me to the next stop. Right here, I'm inside of this box, and then I see a look below into a prior opening range, and then a bounce. And as the bounce moves, I go, probably going to take the other half of my position off, right? Now, sometimes, because momentum is low, and I'm under the VWAP, and my 5 is down, I will cover my trade, and it will turn right around and go all the way down. Yes, that is somewhat annoying for me. However, this formation is a range, and I'm moving into an upward sloping 50. So it tells me, don't hang on, just take your money and run, right? Which is really a pretty good way to go these days, right? In terms of what the market's doing. Take a look at this breakout. Okay, so this tells me they're still repatriating gold and small dips are buys. And, maybe people are buying because they're a little nervous. You certainly don't want to have to, well, I won't go there. So here we are, top of the box, 3,066. That's 2x of this weekly move. So it's a pretty nice target zone, if you ask me. Now, does that mean you go short there? No, we have declining volume on upward motion. It does tell you, hey, take some profit. Take some profit, friend. It's good for you, right? Now, look at what's been happening. Last couple of days, diminishing volume. Today just started, right? Still, volume looks not bad, really. It's holding steady. What do we want to see from here This is, again, inventory accumulation out of a breakout formation. So I'm going to draw another Fibonacci. And that gives us 3,100, right? As the next move to the upside. We have 30, 75, and then 3,100. Let's look at this. Opening range formation way down here. That's insane, right? It breaks out. Look at how many days it does that, right? 3 or 4 days. It's sitting right here, sideways, 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 break to the north. This is inventory distribution. So I'm going to draw Fibonacci right around this zone. What does it give us? 3,066. So blow off top could give us that 3,069, and then, a big run up to 3,080. Dips are clearly buys, folks. Clearly buys. Gold has a tendency to make a savage move up and then consolidate. Okay? So don't rush out here. Let the pullbacks come to you. We are very far from the opening range. We are moving. We really are just simply time framing up. And that's what we're seeing, right? I like the top of the value area high in this zone, maybe the kiss of the VWAP, 3,043 for the buy. Anything else, you got a scalp trade. Let's go to SPY. Weekly SPY, downward 5, dancing at a slightly upward sloping VWAP, upward sloping 50. This is heavy congestion. Heavy congestion. Traders are trying to find some measure of equilibrium. Some measure of equilibrium. They're trying to find it. And so that tells us, we could be in a very sideways sloshy bit. All the way down at 550 from 2 weeks ago, 548, but I see levels lower, right? 539, top of the value area high, 511. Let's go to the hourly chart. Well, no, let's check the daily. Make sure we're on track. 50, still above us. Still trying to grind our way down. Grind our way up, excuse me. Still dip buying. Look at this. Dip, 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 dip. All of these higher lows. If this cycle breaks, we're going to have a problem, right? So we need to hold this 557 this week, or things are going to get pretty noisy, right? Pretty noisy. Let's look at the 1 hour. What are we staring down? We had our 4 a.m. candlestick open up. Remember, the big lines just tell us we're in congested spaces. Overnight lows all the way down inside of this gapping formation. Let's run this to the top of the gap down here. That's 565. Inside of the range and inside of yesterday's range. Deep tips, that means the bounce out, likely to fail. The bounce down, likely to fail. Both of these at the first pass, right? Flat VWAP. Could you take the trade long here at the 4 a.m. open? You absolutely could. If you wanted to take that breakout area, you could. But you're falling right into congestion. Could it move higher? Yes. So you could take it. It just tells you that it's more likely to be sideways because we're right in the midst of everything that went on the day before. So it's very likely range bound. So we watch for the range break and we take it. That's what's the important part here. Upward edges, 570, 571. Downward edges, 566, 565, 563. Qs. Well under 50, not so great, but inventory collected here, tried some distribution back to the top of inventory. What's normally likely? Bottom of inventory is what's normally likely. So that number tells us that we've got about 469 on that low edge. Let's go to the 1 hour. What's it telling us? Oh, for heaven's sakes, I can't lock these. I don't know where that one disappeared from. I got to figure out how to lock these figures. Okay, so here's the opening range, right? Bounced out, look, congestion to the left tells us momentum. I mean, it could run. It's just not likely. So we're looking for a breach of this area or a look below and fail to take us inside of the box that begins at 482, or a look above and fail to take us inside of the box of the morning, and the range event moves in. Now, I think news will potentially get us out of the range, but the range break above 484.50 will signal where we look for next, right? Right now, we're under the VWAP and under the 5 and inside of this. The range break down here, when we've got this kind of motion, I'd say look below, watch it fail, but then go, right? So could it fall like a stone? Yes. We're under the VWAP, but still in the range. So I would prefer to use price as the thing that tells me what's going on. And so I'm going to look for a failed retest of 482 for more negative pressure. All right, that's it for me, folks. You'll see me on Top Step TV today. I look forward to it, and I'll see you soon. Take care.